Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo nightly video for the 22nd of December here in 2020, which means, again, 2021's right around the corner. But we've got to deal with the holidays and the end of the year, which typically is a bullish drift. So back in this logic of this creep to the upside, and that's from Thanksgiving forward, it tends to happen at the end of the year. Every year, certainly not, but more years than not. And so we're getting this continued bullish drift. Now on this chart on the right, it's the hourly frame of the S&P. So where are we? Uptrending, higher highs, higher lows, and this is that creep period. Similar, if we go back a little bit in time, to the end of 2019, end of 20. So on the hourly chart, we're just getting this little jump up and down with this creep to the upside. So that may continue throughout the end of the year into a little bit of January. But right now, any dip we say the dip buyers are stepping in, they are. So each of the dips on the low side of the market are being bought. And we'll take a look at the Nasdaq, clear that, and look at the Nasdaq. And that's our technology heavy sector. And that continues to creep higher. Creep just means a series of up days in a row, and similar to what we saw in the Thanksgiving or the end of November drift. We're getting that in December as well. So not stepping too far ahead of ourselves here, but at the end of the year, the bullish holiday drift continues in the equity market. Now that Dow mini futures or the Dow Jones, the DIA, which is an ETF, that contains or continues to be contained under this 30,000 print. And comparing to the S&P, on the intraday chart at least, that is even more choppy, even more. It's not really volatile. It's difficult to trade. It's just one of those get a position, ideally to the short side of the bear side, and hang on and let that play out for a bigger picture drop in the future. Not happening right now, certainly not. Most likely into January, as was the case in 2020. And then back, we'll go a little bit further. I should pull the S&P up. I just want to compare and contrast what we're looking for in the market here. So if you're curious, we can sort of go back in time and we'll just play the SPX, which is the index itself. And we're not dissimilar to what we're seeing here. But that is the end of December. There is our bullish Thanksgiving creep, and the December creep looked like the market was going to top and turn to the downside, but instead crept higher. Yes, it eventually crashed. And again, not dissimilar to where we were in 2019 into 2020. So that is the bigger picture. Of course, individual stocks are playing different directions. And let's take a look as usual with the bigger picture plays. We'll start with those, call them the FANG, with the monsters, the tech titans of tech, or just big market cap names. And Netflix continues to rotate up from this 450, 460 print, taking it to the top of that range at about 550. Google, or Alphabet, played up to a new all-time high and is traded down. Amazon and Facebook, I don't really have it drawn, but we'll do it right here, is in a compression or consolidation pattern. So that's just your monsters of tech going sideways. And that just means a breakout in the market is more likely the future pathway. We're not going to predict which of those will happen. And that'll be true. We'll add a couple of others to Apple. Now that I'd highlighted earlier had broke to the upside. And Tesla, which is its own little stock that just got added to the S&P 500. And see, it shows up now in the other way, in the S&P 100. And that is new. There it is. I typically trade within the S&P 100 stocks. New addition, Tesla. So we'll take that into account. That same triangle is breaking, or price is breaking to the upside in Apple, which will start there in terms of what to do and what to look for in the future. So that is a break to the upside. That suggests almost shy of the target, but that suggests a rally up to this prior high, which may have been completed in today's session, but it may go a little bit higher in terms of this further push to the upside or a new in this case 52-week high, which also would be an all-time high. Double check, not all-time high. Yes, barely up to that level right there. And that would be an all-time high if it crests above 140. Speaking of stocks making new all-time highs, this is just a list to keep in a watch list and watch strong stocks get stronger. And today's session, it was flat for the most part. It was a range morning, a little dip to the downside. It was purchased and bid back to be a range day today. So what stocks outperformed the market? This is a scan list that I'll click and show the attention to these stocks. And the goal is to buy pullbacks, retracements, or bull flags to expect the trend to continue. Not necessarily put a trade on right this minute, but on pullbacks or favorable buy conditions. Now the top of the list would be, by market cap, PayPal, then Oracle, Intuitive Surgical, and on down the list there's Etsy, just name some you might be familiar with, NetApp, and maybe some others you're familiar with that I'm not. So we'll just go through a quick list of some of them. We'll apply the daily chart on the right, there's Apple, and the weekly chart on the left. PayPal continues to get strong. It's a strong stock getting stronger, and that's just a squeeze. And that's just playing up all-time highs. Again, strategies to buy the pullbacks, not necessarily all-time highs. If you must trade something, it's probably a fade or a hedge to the downside, but I'd rather buy on the pullback. That's a retracement type of trade. And Oracle, not dissimilar in terms of higher highs, higher lows, and a rising trend. On the weekly chart, that's a much more stable or salient or persistent type of uptrend. You can see that from this rising 200-week moving average and persistent highs on the daily chart. And then Intuitive Surgical. Keep in mind that it's difficult to fade. Fade means to short highs in a trend or to buy lows in a downtrend. Possible, certainly, absolutely, statistically valid, but difficult given the trend is higher. And Intuitive Surgical just had another move above this 800 per share barrier that was holding steady and then today broke through it. And notice that the importance of a stock scan like this, as simple as it is, show me stocks making new 52-week highs, because every single one of them, right here on this 2017 print and outside of April forward in 2018 were all-time and, of course, new 52-week highs. Same for 2020. The logic is it continues to grow, and the trades become pullbacks, retracements, or call type of trades on pullbacks. Could be a 3 to 5 day pullback, it could be a price level pullback, but getting into an established trend. And maybe a couple others. And Chipotle, call this the overpriced burrito. And fundamentals, right? Recession, pandemic, whatever the headline news is, Chipotle Mexican Grill, the overpriced burrito is breaking through and continuing. We'll get rid of this because that was a little trade structure a few months ago and no longer applies. So if you're curious about the triangle I was discussing in Apple and Amazon and other stocks and what happened next, what the trade might be, there's a similar type of structure that just broke in Chipotle. And that's a breakout type of trade. I am more comfortable trading pullbacks, which are flag type of retracement entries. So if the market's down for 3 to 5 days or at the bottom of a value area extreme, I'd rather go long to play the upside swing, given that the broader trend is to the upside. And just that's a few listing of stocks in the market today and the technology names of stocks making new highs. We still have another week or so to go in 2020, but that means 2021. It's right around the corner. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for December 22nd, 2020.